Hey everyone, welcome back to the channel. Today, we're diving into a big question. Why is Canada's economy falling behind America's? In recent years, Canada's economic growth has slowed while the US has surged ahead. From productivity issues to trade dynamics, there are clear reasons for this gap. In this video, we'll explore 10 key factors backed by data and expert insights. Whether you're Canadian, American, or just curious about global economics, stick around. This will shed light on what's happening north of the border. Let's get started. First up, let's talk about productivity. Canada's economy is struggling because its workers and businesses aren't producing as much per hour as their US counterparts. This isn't a new problem, it's been building for decades. Canada's productivity growth has lagged for over 20 years, ranking 18th in the OECD. Unlike the US, which has embraced tech and innovation, Canada's businesses invest less in R&D and new technologies. This means Canadian workers generate less output per hour, dragging down GDP per capita. Experts like Paul Beaudry note this gap is a major reason Canada is falling behind. Productivity isn't just about working harder, it's about working smarter. Next, Canada's heavy dependence on the US market is a double-edged sword. While trade with America boosts growth, it also makes Canada vulnerable when US demand shifts. About 80% of Canadian exports go to the US, but since 2022, American consumers have shifted from buying Canadian goods to spending on domestic services. This change, as RBC economist Nathan Jansen explains, has hurt Canadian manufacturers. The US also outpaces Canada in oil production, reducing Canada's export advantage. This reliance leaves Canada's economy exposed when US policies or consumer habits change. Trade ties are crucial, but they can also hold Canada back. Another factor slowing Canada down is its higher interest rates compared to the US. This policy difference has real impacts on Canadian households and businesses. Canada's central bank raised rates to combat inflation, but unlike the US, where most mortgages are fixed for 30 years, Canadian mortgages reset every 5 years. This means more Canadians face higher payments, reducing consumer spending and business investment. Tiff Macklem, Bank of Canada Governor, notes this traction of monetary policy has throttled demand, unlike in the US, where lower rates have spurred growth. Interest rates show how policy choices can widen the economic gap. Canada's oil industry, once a growth engine, is now a drag on its economy. While the US has boomed, Canada's oil sector has stagnated. After the 2014 oil price collapse, Canada underinvested in oil projects, unlike the US, which ramped up production, especially in the Permian Basin. Now the US is the world's top oil producer, while Canada's growth lags. This has reduced Canada's export revenue, as noted in The Economist, widening the economic gap with the US, where energy independence boosts GDP. Oil isn't what it used to be for Canada. Immigration has been a hot topic in Canada, but its rapid pace is creating economic challenges rather than solutions. Here's why. Canada's high immigration rates post-COVID have boosted population, but not productivity. Experts like Paul Beaudry argue the influx of low-skilled workers has strained infrastructure and increased unemployment among immigrants at nearly 12%. This rapid growth dilutes GDP per capita, as the economy isn't growing fast enough to support the population surge, unlike the US, which balances immigration with productivity gains. Immigration's impact is complex, but it's clear Canada's approach needs adjustment. Next, we'll discuss the housing market's role. Canada's housing market isn't just a housing crisis, it's an economic one. The focus on real estate is pulling resources away from more productive sectors. A large share of Canadian investment flows into real estate and construction, which RBC notes is less efficient for overall growth. High housing costs and debt levels, especially for younger Canadians, reduce disposable income and business investment. Meanwhile, the US has diversified its economy, avoiding such a heavy reliance on housing, which has kept its growth more balanced. Housing isn't just about homes, it's about economic priorities. Let's move to the next reason: lack of business investment. Businesses are the backbone of any economy, but in Canada, investment levels are alarmingly low. This is another reason for the slowdown. Canada ranks near the bottom of the G7 in business investment, particularly in R&D, tech, and capital equipment. The Coalition for a Better Future highlights that this underinvestment, at its lowest since World War II, stifles innovation and productivity. The U.S., by contrast, attracts more venture capital and corporate spending, driving economic growth and job creation, leaving Canada behind. Investment is key to growth, and Canada's falling short. The U.S. tech boom has been a game changer, but Canada's largely missed out. This technological gap is hurting its economy. While the U.S. leads in AI, software, and innovation, Canada lags in adopting new technologies. RBC reports Canada ranks 5th in university R&D, but 22nd in business R&D, missing opportunities like AI that boost productivity. This contrasts with the U.S., where tech giants drive GDP growth, leaving Canada further behind in the digital economy. Tech isn't just the future, it's the present Canada isn't keeping up with. Let's talk about government policy next. Government decisions play a big role in economic performance, and Canada's policies aren't helping it keep pace with the U.S. Here's how. Critics, including the Fraser Institute, argue Canada's focus on population growth via immigration, rather than productivity, masks deeper issues. High taxes and regulatory hurdles deter investment, while U.S. tax cuts and deregulation boost its economy. Additionally, Canada's large deficits, like the $500 billion COVID spend, haven't translated into sustained growth, unlike the U.S.'s more targeted stimulus. Policy matters, and Canada's choices are weighing it down. Finally, we'll discuss global competition and Trump's tariffs. Lastly, global dynamics, especially U.S. policies under leaders like Trump, are putting extra pressure on Canada's economy. Here's the scoop. Trump's threatened tariffs on Canadian goods, as noted by RBC and Time, could trigger a recession in Canada, which relies on U.S. trade far more than vice versa. The U.S.'s focus on domestic production and protectionism strengthens its economy, while Canada struggles to adapt. This uncertainty, as Professor Rob Gillizo warns, also delays Canadian business investment, widening the gap. Global forces are tough, but Canada can learn from them. We've covered 10 reasons why Canada's economy is falling behind the U.S., from productivity to trade and policy challenges. It's clear both countries face unique hurdles, but Canada has opportunities to turn things around with smarter investment and policy. If you found this insightful, hit that like button, subscribe, and drop a comment. What do you think Canada should do? Don't forget to check out our other videos on global economics. See you next time and take care.